Yeah, Nick. That's the way
There
we
we go.
start out every week. It's Stocktwits Community Rip Live. You're watching your homies, your brothers from another mother's. Hey, guys. It's Bags. It's Nick. It's Gotham. What's going on? What are you guys feeling like? The market just seems to be dribs and drabs right now.
Yeah, I don't know. I left to head out of town on Wednesday night after a show last week, and the only stop that I had run was actually some orders that I had in Tesla under 300 that I actually immediately bought back when I got back on Monday. But I feel pretty fortunate to have missed the shake and bake on Thursday.
That was fun. Did you have a good time, GP?
No, that was annoying.
Hey, look, I've got the Qs up here. We're right back up near all-time highs. We've sold off a little bit today, but we're right at that 530 something level, 532.80 right now on the Qs. GP, how sexy is this chart to you after basically 2 months of this wild run from the bottom here on the Qs? Currently up 32%.
We are grinding, and we have been grinding, and when we grind, there's a pullback that happens where everyone gets excited, saying, "Look, I told you it was a sharp rising wedge." And the sharp rising wedge will culminate somewhere probably in the 58, 5900s. And then we resume higher, right? Like I'm not this stuff is to me, this stuff is just kind of par for the course. They know this is a resistance point. They'll beat it down. All the bears will get loud again. Be like, told you. You've been wrong for 2 months. Bulls were wrong for 2 months. So let's break it. Let's call it even. And maybe we get, the bears right for 1 month into end of June or mid-July. And then we start to move a bit higher. But I like it. I can definitely see the markets pulling in an incremental high, close high, reversal where everyone starts getting loud again. And then we pull in, let's say 5-7% correction versus levels, right?
So you're thinking something like this, then something like that. And oh my God, the world has come to an end. We're going to revisit lows. And then somewhere over here, it doesn't happen and does that number.
Yeah, you're essentially going to put in that consolidation handle, right? Like have it kind of go sideways and then rip through after that. And I think the first target on the S&P after all that will end up being around 64, potentially 6,600. I think 6,600 seems more likely just based on the lack of participation among some of the bigger names, Apple. That's about it. So it's grinding, it's doing well, but grinds usually suck because if you're an options player, you're getting railed. But if you're a commons player, you're enjoying it, right? So
we had a bit of a differing opinion the last couple of weeks on Apple. So it sounds like maybe you soured on Apple a little bit, GP?
No, I don't. I just don't think Apple is part of the bull cycle here, right? Like there's so many other names and stuff doing better that people are allocating their money there. And if the market turns, this money coming out of these names that have run 30, 40, 50, 100% over the last couple of months start to put money into Apple and become safe, so to speak, right? And so Apple props up and everything else kind of gets demolished, so to speak. It's rotational money flow that we talk about quite often, right?
Yeah. That's kind of what I was thinking in the back of my mind. I'm like, yeah, everything will look like it needs to take a rest, and then Apple will finally step up and move.
Well, that's what we've expected. We've laid that playbook out for, I don't know, years now. You only need 2 to 3 megas participating at a time. And right now is Apple's turn to just take a little siesta, find a find a little nappy spot and, don't fall off a cliff, right?
Yeah. Right now, it doesn't look like anything too brutal in Apple. Just like it hasn't been a lot of distribution volume. There was big buying volume. That mother candle high was 198.85, and basically that was April 9th. And since then, we have popped over it, popped under it, popped over it, popped under it, popped over it, popped under it, popped right in the middle of it right now. So it's just there.
Hey, Nick, what formation is this right here?
I mean, depends on your time frame, but like, you could probably argue either. You could argue either bear flag or bull flag, I think, depending on. Yeah.
Bull flag, you would use this as the pole then, right? You'd just skip all this other history, and you would say, here is your flag. Obviously,
yeah.
If you're a bear, you would say, this is your flag, right?
Yeah. Yep.
Yeah, I was looking at this. I was actually, after our conversation last week, I've been sort of looking at stalking some Apple entries, and I haven't been in Apple in a while. But I probably might pick off a little bit down here if it gets to like 196.
Yeah,
we'll give it a teaser run. You know what I mean?
I think anything under that mother candle, even if it's 5% below, I think that eventually becomes a great buy, right?
This candle.
Yeah, which is like 198 ish.
Yeah.
As you can see, each wick
187 to 216. We're currently 199.
So that mother candle where that you see the big volume there, and every weekly candle that's tried to break back down below that has been bought up, right? And it's wedging through. So let's say if we get back below that a little bit more into that like 196 area that you talked about, it becomes, I personally think it gives you a good risk to reward. Can it fail? For sure. But you're in a much better entry position.
Yeah, I have an order in at 196, but I'm watching it. This will be a trading position. It won't be something that I'm going to hold on to long term. I have enough megas in my portfolio, and who cares about megas, right? Because it's Shitco Summer. We anointed that 2 weeks ago, and what did you say, Nick? TEM last week, Tempus AI, right?
Yeah, 10 pop pretty good.
Just look at it. Right?
Just getting started.
Just getting started, the man says.
Yeah. As long as the weekly closes above that 71.99 area, and I think we talked about it before, the Pelosi June 90 calls that were in heavy circulation in, I think, late April, early May. So it's kind of lining up in the same kind of scenario. It looks fantastic.
I just think the overall markets need to, for it to really be a Shitco Summer, we need the overall indices to continue to cooperate and move in the upward direction.
That's the thing with, like, we talk about the trajectory, right? Like, maybe you want to say it's overbought or not, but IWM isn't, right? And you got that up on your screen there. It's been grinding, right? It got to the 200 SMA today and then faked a breakout and went below it and is now trading under it. But this one leading initially with heavy volume has been lagging recently, right? So if you're looking at this from a perspective of this is not even started yet, which is my opinion, then it goes with the Shitco Summer, right? And like a lot of the names you're already seeing are outperforming the rest of the markets. Wayfair. What was yours, Ben?
Roku.
Roku's been outperforming.
Roku's been on a heater for the last couple weeks.
Yeah, and then you can also look at like what gets included in the IWM are financials, right? Look at Dave. Look at Goldman. Look at JP Morgan. Look at this. Dave just it's 30. It was 108 before earnings or something like that. It's at 230. Anyway, my point is that if you were along the megas, you got 20, 30%. But if you're along shitco companies, you are now in the potentially 50% to 100% gainers category. And that's without the IWM even breaking out.
Doing anything. Yeah, right.
Yeah, it hasn't done shit. I mean, well, I shouldn't. It's up 24% from the bottom over here in April. But overall, yeah, you look at IWM on the daily, it's some people won't even touch a stock that's under the 200, right? Daily.
Yeah, exactly. You have an index underneath that. And so what I will say is if you're in this space, we've experienced this before in small caps, which is the breakaway gap, right? And so this teetering towards the edge of being bullish on a larger time frame results in a gap and go conversation. We haven't had any gap and go expansion bars in the last couple of weeks, so that's kind of annoying. Looking for them across the board has not gotten that. It's been a grind. But when was the last time we got a breakaway gap in IWM? Yeah, COVID, right? And so if you're in the dude, like it took out the whole range in COVID. Yeah, go to the weekly. So the 170 level that it's been testing for the last 3 years was the breakaway gap. Look at that red candle that you have on the left side, right?
Holy shit.
That gapped above the whole range. So in my opinion, we are still, 30 points below where a breakaway gap can even happen?
Yeah.
Right?
Yeah.
Breakaway gaps don't happen in the middle of the range. Breakaway gaps happen from at the top. Right, it's broken away from the all-time highs, not broken away from middle of the range. So you're looking at something that is, and IWM has failed many times over the last few years. But if you're looking at the technical setup on the weekly here, as Ben's got, you have an entire base that was formed between 2022 and 2023 in this 170 range. It tested it how many times? 1, 2, 3, 4, 5 times in that base, and on the top side it tested it maybe 4 or 5 times as well. Finally broke out in 2024 and then came back and retested the whole range. That whole range was also where the breakaway gap happened in 2020. It's also the 50% retrace of the move. It is a lot of things that it's got the recipe to be higher. You have to see it participate because IWM has failed so many times. Small caps have an indice that's designed for failure, has failed so many times. So you actually have to see the price action go for it. But it doesn't mean you don't keep trying to make sure that you're part of this conversation. And with everything sitting underneath, that's looking pretty well, financials, shitcos, all that stuff, it's something to pay attention to.
Well, I did want to bring up the IWM because you guys know I love when price exceeds the moving averages, especially on the weekly time frame. And what did last week do in the IWM? It rechecked down on the 9 and bounced all the way through. Now you just need to see these move over, which with a gap up this week and potential doji looking candle forming, that might be some indecision, but still it looks like that 9 weekly is nice support. So even if I were to enter a trade here in the 2 teens, I mean, my risk is down to 206, but the reward's up to 232.
Yeah.
Right?
Minimum.
Yeah. I mean, depending on how you want to play it, like you could layer in until you get up there and then take off some as you approach resistance. And then if it gaps over, you got house money.
Yep.
I like it. A wise man once told me, though, that no great rally or the best bull markets happen when semis are running. And that's my shitco for this week is UMC, United Microelectronics. And look at that guy right at the weekly 200, a little resistance. So I think we might have a little faffing around here on this one. But if you look at the daily, it's got everything going in the right spot, and you're approaching a prior resistance level around $8. So I think between $8 and let's just call it $7.70. I think that's a great range to be in for Shitco Summers. And if semis do well, UMC should at least be tradable and have a pop.
Yeah, it looks good.
Yeah, I
like the base.
It looks really good, but like everything else is like, can we break through these consolidation pivot ranges? Because I have yet to see it, right?
I mean, you've got it at least up till $8.86 in my estimation, which is, if I can get my little clicker to work here, it's about 15% to the upside. So that's not bad on a trade. I'll take 15% every trade every time. GP, Nick.
Yeah,
Ben, when it comes to when it comes to a trade, for instance, are you looking for a particular like price level to hit before you take your gains, or how are you determining your sell on like a momentum trade?
Just in this, I would probably have two tranches, Nick. If I were to, and I may start some UMC. If I were to start this, I would look to get in somewhere down here in the sevens. And this is the weekly time frame, and 750 is where that 9 is. I would hope it doesn't come back down that far just looking at the candles. But if it did, I would take some there, and then I would take some over the weekly 200 probably, because that sort of $8 area has served as resistance. And then I would sell into the highs closer to 9. And whatever I had left, you're really good about setting those trail stops. But I would just keep an alert set that if it goes below that $8.10 area, go ahead and pull the ripcord on those others. I always sell highest cost basis first too, just to get rid of those shares, right? And then it gives me a little more play toward the bottom. But that's how I would do this one.
I feel that. Yeah, I gotta think that's how most people or most traders should like. I like to find whether it's a base or pattern of some sort and kind of determine where I think the measured move is. And then at least from there, like I have in my mind, it's like, okay, I'm gonna be pretty rigid on like, you know, my goal or measured move target, but I'm gonna be pretty flexible in like how it gets there until like, let's say a certain level or floor gets breached. Then it's like, okay, this pattern has been invalidated. I got to rethink my approach on this name in particular. But I think if you like, when you do that, you can say, you're like, oh, hey, you know, price hit my measured move. I want to take half off, a third off. I want to take 80% off. Just raise your stop to break even on like the remaining shares and just let it ride. But I think that's kind of like, I just, from what I can gather on like Stocktwits in particular, it's like, you know, guys kind of flutter between like kind of momentum traders versus like investors. And then of course you have the day traders, but it's like those are kind of like the three sects of people I seem to kind of come across. So it's, you know, anything like you've said in the past, anything can trade.
I think for me, if it's a name that I want to be involved in, I want to layer in 3 or 4 tranches of buys, hopefully lower, but if it goes higher, you have to buy higher. So what I'll do is do that. And as I reach resistance points, I'll trim a little off, not much because I want to be long the name, but if it's just simply a trading vehicle, hey, you guys know I love Tony Gwynn. It's just about base hits, base hits, base hits. It's great to have those runners that, you know, 100 or plus %. Those are awesome to have. And those are kind of trophies in the portfolio. But the way I look at it is anything that can trade that has a nice setup, I want to take the profit out of those and put it back into something that I want to be invested in.
Sure.
So I move those profits into something else. So speaking of something else, Broadcom, that was one of the stocks that I bought during April's Liberation Days, and just it's been amazing. And they had earnings last week, and I wanted to point this out. Look how well Broadcom tracks the 24-hour moving average, not the daily. And as soon as it hit down there, I was like, well, we're getting 230s unless it bounces back off this 245, 246 area. And sure enough, we've bounced back finally after a few days post earnings. But I laid out a perfect detailed trade plan for anybody who wanted to be active in Broadcom. I think it got 1 like. So that was awesome. But it basically was like, here's the trade plan. Here's exactly what Broadcom's going to do. If it doesn't do this, it's going to do that. And voila, we're back above the 24-hour the 24-hour moving average. And the way this guy tracks that, it's too perfect. Whether it's on the way up or the way down. So sometimes you just have to change your time frame. Sometimes daily work, sometimes weekly work, sometimes 4 hours work. But for Broadcom in specifics, the 24-hour moving average, 9 moving average is like money for that thing.
Yeah.
And then you wait and see if it hits one of the lower ones. It's pretty magic. Nick, you had a Shitco.
Yeah, I mean, I had Tempus, but I also kind of thought, I can't remember if it was Keith or Max, whoever picked, they picked ASTS, and that was kind of another monster ripper.
It was Keith.
Keith, yeah.
Shout out Keith.
Yeah, Tem's looking great to me. I still think it's still in the base. It hasn't even, I don't even think it hit. Or we took out that pivot high, yeah, but it's still within the base until, I don't know, what GP say.
I mean, if you'd taken the recommendation last week, you'd be up 20-some% this week. Sorry, GP.
I'm not in. I didn't say anything about ASTS. I said it about TEM. The weekly pivot high is 71.99. All right, like if you go to the weekly chart there.
Oh, okay. Yeah, I'll be a lot happier when it, even on the weekly, it kind of clears those wick highs.
It's a combination, right? It's a weekly and monthly. So when it breaks through that, it's power. And this is something I haven't seen in a long time in a new IPO is if you go to the weekly, Ben?
On TEM?
Yeah, on TEM. And just expand to since it IPO'd, right? This is building a base above the IPO level. Normally, you get this IPO immediate. Look at what Circle is doing. Look at what CoreWeave is doing. Look at what eToro is doing. Look at what Reddit did. They basically sell off initially as the initial hoorah weighs off, and then it rockets up, right, for the next 3 to 6 months before expiration, and then has its long endured painful down cycle where it bases and builds and bases and builds. And TEM hasn't given you that. Instead, it's just basing above the IPO high. So if you're sitting here trying to understand what's, to me, it's a different look on IPOs than I have experienced in a while. I'm like, oh, that's actually pretty powerful, right? Like not behaving like a typical IPO tells you, and granted, it's moved a lot. Don't get me wrong, but it's still basing above that IPO level, right? And every time it gets back to that IPO level, it's been bought up, like each and every time, and it's higher lows, higher highs on the weekly, and it's like this, right? It's going like this and going like this, and then boom, or can go like this and boom down, right? But you can see the accumulation that's happening here, that people are getting into this and wanting to be long this for more than 13 minutes like your average trader.
It's a big Kathy name too.
Yeah. Speaking of Kathy,
like,
we should talk about her. Go ahead, Nick.
Oh no, I was just gonna say, like, I find it. I mean, you guys know me. Like, I don't have a TV. The extent to like content that I kind of really consume is largely Twitter Stocktwits. But I just like I can't shake this like the feeling of like wild innovation that's like coming at us, 100 miles an hour. They're literally already talking about, robotaxi already kind of like all these things that are like coming at us. It's difficult to shift mindsets from like shitco Momo trading to like, oh fuck, like I really want to own this thing and I want to own this thing for like the next massive leg higher. I don't know where I was necessarily going with that, other than just when like we're looking at these shitcoins, a lot of them like of what they are is like, again, they're Momo names. Like the reason the Momo is there is because people are getting all hyped up on this thing and there's no substance to it.
So,
but if you can kind of tailor your shitco, if you can tailor your shitco curated list to at least the more quality names or like the potential quality there, you have a better chance at catching like one of these names like for the duration of this next like leg that we're going to see, or at least that I think we're going to see.
Would you put Tempus in your quality shitco company? I mean, it is the 8th largest holding of all of her holdings.
Is it really?
It is.
So I got a thing for Kathy, so I mean, I feel like I'm in good hands.
Of everything she owns, it's the 8th largest one.
Okay.
Yeah. In general, based on what the chart, I don't know anything about the fundamentals, so don't quote me on any of that stuff. What I'm seeing in this chart is there's a ton of buyers above the IPO level every time it gets there. So yeah, maybe it goes to 72 here and then it gets crushed all the way back to that 45 level. It's basing above a pivot is always my sign of strength and with volume, right? And so Tempus AI would follow in that category of HIMS, right? HIMS is part of the Shitco Summer companies as well, but they're a solid company and people want to short it because it's a boner pill company. It's a meme company, whatever you want to call it. Ultimately, they're going to miss the bigger move. And Tempus AI seems to, you can see it with the HIMS too, right? The amount of volume that's come into HIMS on these buys is ridiculous to say, hey, we want to be long this for a really long time. And so, yes, I think it's pretty easy to decipher shitco companies versus non-shitco companies. And like, so no offense to you, but Roku is one of those shitco companies. I don't think it's a non-shitco company until it proves itself, right? Until it goes profitable. It does the things that the stock market usually requires of stocks, which is show how to make money, right? So, and so, right, like I do value some fundamentals there. And like Wayfair, why I chose Wayfair more than the other ones is because they've gone profitable. They've understood the task. Now they have to return to growth to get the expansion. But there's a lot of buying in Wayfair over the last 3 years to say that, hey, if they do expand out, it's going to have the support from its shareholders that it's going to be a much, much bigger breakout.
Yeah, I don't disagree. And no offense taken on Roku.
Yeah.
I think there are different flavors of shitco, if you will, right?
Yeah.
There's the things that aren't profitable and for whatever reason are a good trading mechanism. Like I say, anything can trade. And then there are some solid companies that would be shitco just because of either a large short holding or they have a lower stock price. I mean, one of the most hated, I'll point out that, I've done really well in under the $10 area is SoFi, right? SoFi is a legitimate company, but because where the price action was and the way the shorts controlled the price of the stock, a lot of people would say SoFi is definitely a shitco. It's not in the S&P 500, right? So it's technically a shitco, but
everyone hopes it's Palantir, but it doesn't have the growth that Palantir does, right? So you can see that there's degrees to it for sure, which is, hey, we're going to do well. But then, like, if you compare SoFi to Dave, take a look at that. That's a company that's executing on multiple time frames, right? This, like, if you wanted to be FinTech and you chose SoFi over Dave, you got annihilated.
Yeah, Dave's a much better buy, no doubt.
Right, but they continue to prove themselves over and over, and so when you continue to prove yourself quarter after quarter, you start to get the expansion in PE. Right, people are like, okay, these guys actually know what they're doing.
I mean, for the better part of 2 years, at least, Dave would have been a shitco, right?
Exactly. But when management understands, look, the ultimate one is Carvana, and Carvana has absolutely destroyed the fraud callers. Maybe it fails here, but you've been wrong for 300 and
I know
dollars in multiple years. So maybe you end up being right, but you could have gotten 100x on this. But the one thing they understood that no one else understood, and they understood it early, was we need to go profitable. And they were one of the first companies, part of the shitco tirade of 2022, went profitable, and they have been rewarded.
Nick, you only have to be right once. I don't know what you're laughing about back there. You know, you can be right to the downside one time, and all of a sudden.
Oh, yeah, I know. It's just like, I don't know. I've made the mistake of like starting to engage with somebody, and then I go and I read their feed, and it's like, dude, like you're literally just posting like bearish posts on this one fucking ticker like over and over and over again. Like, who are you trying to convince? I don't even like. I just certainly don't fall into like a perma bear, perma bull camp. Like, I prefer to trade with the trend. That's all.
Yeah.
Like, I don't. But
I mean, it was just dumb luck that I saw this fall off in the spring happen. Right. I've never been a bear in my life. So
I think you had a pretty quality plan, and I thought that your the way that you discussed it made a lot of sense. I could tell that you were also upset that Trump won, and I was a little like, I did actually want to say something. Was like, man, I hope you don't allow, like, I think GP actually said it better than I did, but like, man, don't let your like political bias like get in the way of, you know, you making money or you printing money, you know, putting trades on. But the way that you played it and like kind of again like layer and step back in, I thought was pretty sweet. Pretty sweet to see and like kind of watch in real time. It's different than the way that I
follows me knows my politics, and it wasn't about necessarily who was in the White House. It was what the plan was when somebody came into the White House, right? And the plan led me to where I was at. And if I was wrong, I was willing to eat that. And I don't want to make this about me.
But you also didn't go.
You guys did a great job of saying, this is the moment to buy. This is when you need to be stepping in, right? And you weren't necessarily holding my hand, but I feel like there were a lot of people who, you know, if you're in the car, you're grabbing the old shit handle, right? Because you're afraid you're running off the cliff. And there were a lot of people in that vein. And Nick, I'll never forget when you said, well, we've already V'd out. And I said, what in the hell do you mean, right? Like, we haven't had any confirmation. How can you say we V'd out? But we V'd out. And so kudos to you guys on that part.
Those volatility bars at tops and bottoms are insanely powerful, right? I think I think that's like, obviously I thought a pull was coming, but the extent of the pull was a lot more than I ever imagined. I thought it would stop at 5,600 and it went to 4,800. So did not anticipate that. So it was 100% wrong. But when it holds 7 different confluences on every time frame, like you're still calling it a bear market bounce, you've lost the plot, my friend. not you guys, I mean, like, just in general, right? Like, we just had the fourth worst decline, I think, in S&P history, the second best day in QQQ history, I believe, like the 30 something years it's been trading. It had a 12% update. If that's not like a light bulb moment for you, then you probably need to do a bit more work on time frame analysis and stuff like that. But I still think that there's a lot more room to the upside, and I can't stand people who think they know how I trade, and when I get bullish, it's time to fade me. But at 2 months, like, yeah, that's fine. And look, ultimately, my time frame's not 3 days, right? It's not 5 days. It's multiple years trying to capture the bigger picture on stocks. Yes, I own Tesla, but I didn't buy it up here. I bought it in the hundreds, the low 100s, and the low 200s. So you're going to come at me for Tesla going from 400 to 200 and me not selling. There's a difference between you and me, right? And that's okay. We're just different types of investors and traders. You want to catch every 5-minute move or every 3-week move? Cool. Do you, but that's not what I'm here for, right? So,
well, in defense of myself, when I said, well, I'll get bullish when GP gets bearish, historically, looking back at our podcast, the moment GP becomes sourpuss has usually been okay, we have to start buying something.
Yeah.
I mean, it doesn't matter. We can go all the way back to the beginning. Historically, when you become sourpuss, it's like
from the beginning, it's
time to start buying something. I got to buy something.
That from the beginning, it actually started with the Netflix trade and calling for the market to follow in the direction of Netflix, and that was January 2022, right? So,
I think the most
from those prior highs, by the way.
What's that?
Netflix is up 77% from that high that you called on the Netflix collapse. So
and also called it
down here. Even if you just held on for dear life and never did anything, you're up 77%, and you can thank GP later.
And we talked about the bottom from just the Netflix chart here, right? When we talked about that May bottom in Netflix, I'm like, that's the market bottom, right? We bottomed, I think, slow over early June, right there with a lot of names, and we retested it in October. And when your bull market leaders lead, you have to pay attention. It's just you have to. You don't have to. You can be stubborn, but I have to pay attention. So,
GP, I think the greatest signal was actually the show we did in October of 2023, when like we broke out of that kind of the stage one bottom, like on the indices, and then we started to wedge up there, and it looked like a giant flag. And I remember specifically you saying, "Dude, everything looks so fucking shitty right now. It actually looks good." And then we took off like a bat out of hell from there. It's probably one of my favorite, like, just, I don't know, moments.
But isn't that the truth? Like, so when you have extreme readings on both sides, when you're like, so like, I was talking to my cousin over the weekend, and they're like at this baby shower, and they're like when you get to the point where your entire watch list has one name on it, it's time to start buying, right? Like, find the ones you want to be. Right? Like, it's when your watch list starts getting to 20, 30, 40 names deep, it's time to start selling. That's just trimming and trailing and stuff like that. If you don't care about the trimming and trailing, fine. Maybe you buy some puts to cover yourself or whatever it is. But when those, dude, we are still on the survey, the bull and bear survey, we are still dominated by bears on that survey. 17 weeks later, we are still more bears than bulls.
Yep.
So that just tells you what level of what this market has to offer here, right? So I think most people should be ultimately wanting a dip, right? Like wanting a dip to get long, even though it will feel, because the dips are not, they don't grind down. The dips are whoop, like, right? It's a news driven event. It goes.
Yeah. Last Thursday.
Yeah.
Yeah.
Yeah. Like
if you were sleeping or you removed your limit orders, right? You missed.
Yeah. But that's how often has that theme happened over the last month, you guys? Like in terms of things refusing to follow through. Tempus AI had a short report and couldn't find a single. 19.89% down in a single day on the heaviest volume in history, and never made another low. Like, I think people are used to the older behaviors in stocks, which is when they come down, they get their like 10, 15% moves down and they kind of slow down. But with how options kind of dominate the market, it's the same thing that happened to Tesla last week. It was supposed to come down, right? It's supposed to come back and test this like 321 level, and it was there, right? And then Elon got into a tweet war with the president of the United States, which is not good on, even if you're enemies, right? Like if you're enemies, it's not good. If you're friends, it's even worse. And so they were able to take, if you were, I think I posted it on Twitter. I'm like, the largest gamma strike on the put side was 275 when Tesla was at, I think, 310 or somewhere around there. And I'm like, they're going to slam it all the way down there because there are no calls to support it, and flow just takes over. And boom, we got to 275 at exactly 330 into that gamma level, and then we haven't been lower. Right? So I think a lot of the flow dominates these moves and exacerbates them to the downside a lot. But there's been no follow through. Tempus AI, Marvell, we talked about, right? Tesla, a lot of these. The only one I actually see follow through is BSX, which I don't know why, but there is follow through to the downside. It's a double top, right?
Scientific.
Yeah. Right? Like it had that volatility bar, and then it's been kind of following through the downside. But there's not a lot of follow. Look at even Rocket Labs, right? Rocket Labs yesterday had a big 11% down move, and
still no follow through.
I think it kind of got like a couple of cents underneath yesterday's lows or something like that, but there's been no follow through here. When you have a move like that on decent volume, you would expect it as a trader, but you're not seeing it across the board. Maybe it happens next week during OPEX, I don't know, but that tells you that all of these pullbacks seem to be manufactured for them to get long because they missed the bottom in April. That's my opinion right now.
Well, just specific to Rocket Lab here, I mean, I would be cautious up here just because you're seeing all these long wicks on the upside, right?
Yeah.
And when you see that gives me some pause. But no, you hit the nail on the head, GP. I think that we've been in a lockout rally. It's not been, straight parabolic until you scroll out to the weekly chart, right? If you look at the daily, it just kind of goes along. Once you get past this, it just kind of goes, dribs and drabs. And every pull into on the Qs, every pull into the 9 until further notice has been a buy.
Dude, even while we're talking on this community rip here today, and we're browsing through stuff, we just had an intraday pullback of like 300 points or 200 and something points on the NQs, right? We went from 2,200 all the way down to 21,790.
And bounce.
And then it was bought.
Yeah, it was bought, right?
Straight back up. This ball straight back up.
So yeah, I think the price actions for now is telling you that technicals seem to be working on most time frames. So when those technicals stop working, we've talked about this, right? We talked about this at the April bottom. For weeks, nothing held, no support, no resistance, nothing. And then all of a sudden on April 7th, all the technicals started working, right? All these pivots started holding. And so we're still in that cycle of all these pivots holding. There will be a time where this cycle breaks and the pivots start breaking, and then that should be your first clue. Pivots, moving averages, whatever technical you're following, when they stop listening to them is when you start paying attention that there could be further downside.
Hey guys, we don't do this a lot, but we've got a few minutes. Let's take some chart requests. The first two I have are Baba and Shop. Who wants to jump on the first landmine?
I'll take Baba. You want to do Shop?
On the Baba trade. There you go. There's Baba. There's the weekly chart. You tell me what you want me to do, and
personally, I like the larger time frames. I don't like the daily as much. I like the monthly and the weekly though.
Yeah. The daily still has some work to do. There is not a lot of today is like a bearish engulfing, but it hasn't broken yesterday's low. So maybe today's the shakeout before it rips off the China deal tomorrow. And maybe that China deal rips because President Xi says, yes, we are in agreement. And that's all we need in this market these days. So it's confirmation. But on the daily, it is testing and retesting and building and basing through these levels that have been giant energy vampires for the better part of the last 3 or 4 years, right? So I can understand if you're exhausted, but monthly time frame, you start looking at this, it's showing you it's built a base over since 2022 to beginning of this year where it finally broke out of the base. And it's now been testing the top of the base for the last couple of months. So if you want to take a long shot, this is kind of your upside downside conversation. And once this kind of consolidation finishes, I think it breaks up to the outside.
Above 111, I think it's good.
Yeah, absolutely. And the thing I want you to the thing to think about is you see that big expansion candle with volume, right? It typically takes institutions about 2 quarters to finish building their positions, right? So I would say that these are staying inside that big expansion candle that they're trying to buy, trying to accumulate over time before the bigger ripper comes. And if you want to take a look at examples of similar scenarios, if you can pull up the MicroStrategy chart, Ben.
Yep.
Right. So MicroStrategy did this on the monthly time frame. Right? Like on the monthly time frame, it had this big kind of volume breakout area and then stayed inside for 6 months while they were accumulating, broke out to higher. And we are now in month 7 of that same kind of consolidation. And maybe it plays out to the upside, the same thing. Lemonade is one that's setting up in a very similar scenario. We have finished 6 months inside. This 7th month is trying to break out. Just a small little tidbit for people who are new, that if you see these types of expansion candles and not a lot of volume, but the expansion candle has volume, they're going to use usually 2 quarters to kind of build out their position before they let it go. If it's something that they want to build over time, it might be even longer than that, but it's typically at least 2 quarters. And so Baba is in that camp of consolidating in that big expansion candle. Sorry, go on.
I like it. I like it above 111 for sure.
Yeah.
Baba's a name that I'm long from lower, but I've got some eyes on that 111 area. I'm not sure that we'll get it, but who knows? We could. We almost wicked off of it a couple weeks ago. But if you just look at that weekly chart, and this was Liberation Day, right?
Yep.
You're basically still, that's the top of that candle is 114. So even if you don't want to take it down to 111, I think anywhere in the 1 teens is probably a pretty good spot. And you got a pretty defined stop out. If you don't play 111, you can sort of use an undercut of that as your stop. So stays in this little wedge here for a little while longer and then goes higher. Nick, you want to take a look at Shop for the people?
Yeah. Shopify. Man, it looks good. I mean, technically today it's actually breaking the neckline of kind of that, depending on how you want to draw your inverse head and shoulders. It's like there's like a big one and then there's like one smaller in it. I don't know.
You would call this one, right?
Yeah.
Or you would call this one.
That one too. So either way, today I think is largely kind of the igniting bar to this bigger one actually kind of starting to play out. If you're not, I mean, if somebody was getting involved in it today, like this is an easy spot because your stop is like in the gap pretty much, and you have a measured move from 75 to 115. It's 35 points. So I mean, your target on this thing should be back at like 150.
So you're saying like 110 would be your stop?
On an initial, yeah. Like let's say I was in like a half size, I'd throw a stop there. Yeah, like around 110, and then I'd want one down like around 102, 105 also.
GP, this is a name that you've been in the past. Do you like Shop? You still in Shop?
I am not. I think I sold it in like the mid 70s, somewhere around there. I was too annoyed by this. Like the chart pattern for me is too much.
Never really based.
Yeah, there's no base. There's no rhyme or reason for the most part. It has crazy moves. I didn't want to be in it anymore. I was so annoyed by holding it that it just wasn't something on my list of things I wanted to be in. I just found different places where I like the bases. I like the because I think it was one of those ones that had gotten beaten up so well in 2022 when it was sitting in the 30s that I was like, it was a no-brainer. But I didn't actually have any kind of real thought process on where this can go. And so when I looked at it from a technical point of view, I'm just like, this doesn't fall under my guidelines. What am I doing here, right? Like, so I just got rid of it.
The people want to know about SMCI. Nick, would you classify SMCI as a shitco?
Yes.
I think you would, just because, because I mean, how much I wasn't really following along too much with like the whatever the scandal or whatever happened with it. I wasn't really following it much, but yeah, I would definitely fall under a shitco. And I kind of same thing with to your semiconductor point. Like, I think SMCI actually looks pretty good. I
like the way the moving averages are curling over on the weekly. You know, you guys know that's where I usually start. It's holding them all on the daily, the monthly. The 9 is actually getting ready to cross back over the 20. At the very minimum, I think you've got to trade up to this. It's 15% from here. At the very minimum, I think there's probably a 15% trade.
I know there's conversations around it being a fraudulent company, but the volume on the downside, if you go to the monthly on this chart, doesn't really suggest that. Look at that. Like the biggest volume bar doesn't even match the biggest green bar in this cycle. So I would say if it was fraudulent, people would be looking to exit with gusto, right? And and volume and all that other stuff. So I know that's going to be an overhang on this company for a long time, but I don't personally think it should be. Weekly looks great. Daily looks great. Like all of the other AI/chip space names, they've all been in over a year-long bear markets, right?
Quarterly looks good too, GP.
Yeah. But once again, if I was putting money to work, I wouldn't put it in this name because there are too many questions and there's too many volatility answers. And so like Marvell is one of them that's in a similar boat. But if you look at ASML, if you look at SNSPS, if you look at AMD, obviously that's been behaving much better. There's, I think, better chip names, maybe not the best, the same returns in percentage wise, but I think at least they'll have less headaches.
Agreed.
Yeah, I feel that.
And Broadcom, right? Broadcom has been a winner nonstop for years.
And Broadcom is actually beating NVIDIA, right?
Yeah, I just commented to somebody in the chat earlier. I should have been involved in Broadcom 5 years ago. It was always on the fringe of my semiconductor basket.
Yeah.
And for whatever reason, I just piled in other names. But, it's never too late to fix mistakes.
Yeah.
Last one we got here, HD, the Home Depot. Haven't looked at this chart in ages, so we'll see what it looks like here.
It looks like a big old cup of nothing.
Yeah. For a long time, I liked Lowe's and Home Depot.
Retail is just a hard space. It is just a difficult space to be in.
Yeah, I think if you get any opportunities to buy near the base, which is like that 317 to 345 area, basically above 300, it's a good play because it pays you like 4 or 5% dividend or something like that, 3 to 5% dividend. I think I'm long from the 280s, 270s. It just sits in the account. I don't even look at this chart at all. So
Randy wants us to give good old AMD a look.
AMD looks fantastic.
Oh,
yeah, it really does.
Lisa Sue.
I love the weekly probably more than anything. Actually, I love the monthly too, but I love the weekly.
What do you love most about the weekly, Nick?
I like that both the 30 and the 40 week have flatlined. The 10 week is curled, and it's about your. Is that what that's what the golden cross is when the 50 day crosses the 200 day?
Yep.
Is that what that
to
is?
The upside.
So you're about to get that to the upside, and I like just kind of the look of the long, drawn out, kind of descending wedge look to it. It's kind of like.
It looks like 2022.
Yeah.
Like
really
literally exactly like 2022.
Yeah.
Which then went from 54 all the way up to 227. So what do we tag this time? 75. Let's say back to all-time highs in the next 12 months.
Yeah.
I have a confession. You guys know I bought some AMD on the way down through this shitty downtrend. I actually sold some calls yesterday, so maybe lighten the load, if not just collect some premium.
Yeah, that makes sense. Even in 2022, it took a really long time to get the breakout, right? It was after it bottomed, it went from 54 all the way to 140, 150, somewhere around there.
Well, if I get called away, so be it. I don't think I'm going to, but if I get called away, that's the way it goes. My cost basis just got lowered by those shares that will be taken away.
Yeah, absolutely. It looks really good. AMD is like the redheaded stepchild, though. So whenever you think it's going to break out, you should buy some puts.
Randy, I like it above 122 to be actionable, and you see where it kind of wicked into that weekly 50 right there. So I think we're in exactly what GP described earlier as sort of a grind phase. But there's going to be dips, and if you're not paying attention, you're going to miss out. Nick, we got 30 seconds. You want to say something?
Shitco Summer is really all about, we hope for the grand slams, home runs, but like take some money off the table at the base hits. The 10, 15, 20% rips, take some off. Have a plan. Set your alerts.
GP?
Stay long, buy dips, and
Yes.
watch the financials because they tend to be the last sector of secular bull markets.
The dips keep on dipping.
Yeah, but that's something that you should keep in the back of your mind because financials are the last participating sector in the secular bull market. That hasn't even happened yet. So just keep that in mind. I'm not saying we're gonna. It's a bit of a 3 years down the line look, 2 years down the line look, but it's just something to keep in mind.
I'm just flashing up the XLF and the KRE really quickly for anybody who wants to see the financials. But there you go, guys. Just want to say I love you. Thanks for being here. Thanks for doing this every week. I love being with you guys. I love just our hours fly by, man. We get some good conversation going, and I appreciate it. Hey, you've been watching Stocktwits Community Rip Live. Catch us back here Wednesday at 2:00. Until then, trade safely.